talking about the trading equivalent of isometrics versus weights. Right? When you're working out, you use weights, either attached to some weight machine, weight exercise machine, or free weights, either one. Or do you do isometric exercises where you only use the weight of your own body as the weight, essentially, to resist against. And the reason that I say that is because it seems silly. What is the trading equivalent of using weights versus isometrics? That's really not even the right title, because you can actually, well, it sort of is the right title. It's only part of the topic. Oh, now I'm getting all faces, right? Well, all right, it'll all make sense. So, in trading, you can use isometric exercises, which are sort of healthy, natural ways to trade. Like what? Well, actually, don't call them trading. You can call it investing. Right? When you buy and you hold something for a long time, and you buy something that generally tends to go up over time, like an ETF and some, very stable set of market assets that tends to rise slowly thanks to drift over the years. How do you do that? Well, you can just go on any platform that sells ETFs, and most of them will highlight them for you. Generally speaking, SPY, Dow Jones, those indexes also tend to go up over time, right? But there's also plenty of ETFs that do, and that's why they exist, etc. Does that mean they all do? No, of course not. So, are there options where you can, take more risk and whatever, maybe get more reward, but still have it be relatively safe? Yeah, sure. Okay. So, but let's just say the basics are doing something safe. Likewise, you can trade things that are relatively safe, and if you don't use any leverage, and even if you don't do TA, you see the price looks low, you buy it, and when it goes higher, you sell it. And good luck to you if you don't know what's the probability of it going up or down or sideways, because you have no idea. You're just trading naked, right? That's one way to do it. It's potentially extremely risky. In fact, probably is, because again, if you don't know what the information is, very risky. However, if you do know what the information is, then you have a lot more breadth of limiting your risk, a lot more control. So again, it's kind of like isometric exercises, whereas you're using your own weight, your own capital, to put on your positions and take off your positions. You are your own resistance, effectively, and you are your own support, effectively. And you're making the market just like you're making your muscles when you exercise. And then there's the way of doing it with weights. Well, what are weights? Well, to most people, they'll think of the weights as these sort of tools that enhance your experience and let you grow faster. In trading, what do we call that? Like technical analysis? What kind of tools do people use? Right? So, technical analysis. The thing is, most voodoo TA, in fact, pretty much all of it, as you know, if you watch anything that I talk about in trading. Voodoo TA is specifically designed to get people wrecked. Just like weight machines are designed to be used by people who know how to use them, those who don't are going to get wrecked, right, by the machines or by the free weights. Right? In capable hands, they may be useful, but in most people's hands, not so much. And you do need to learn how to use them. And there are proper tools to be used for every exercise, right? Not every exercise requires a barbell, right? Not every weight exercise requires a barbell or a dumbbell or a cowbell or hey, these are a lot of bells, or a medicine ball, as they call it, right? Or all kinds of things that might involve weights, right? Or a chest machine, chest weight machine, or a freestanding bench press, or leg lift machine, or leg press machine, right? Just like in trading, proper trading requires the right tools, right? And that's what the VEPS tools are for. But there's something else that we haven't spoken about, and that's really the other half of this video, which is, well, steroids, right? Steroids can be good if the doctor prescribes them for you to get over a certain sickness that, it can help you with. Or it can be good for certain muscular development, right, if you need it for a short period of time. However, when people use them, especially long term, for the purpose of bodybuilding or other strength enhancements, it has devastating results in all other, many other aspects of the user's life. Everything from their overall health to their physical performance, even intimate physical performance, right? It can destroy certain areas of a person's body, even while helping grow other areas. So it can be a very ironic thing. The guys who look all big and tough, for example, who use anabolic steroids, are, how do you say it? Pretty limp in some areas where limpness is not the most highly desired quality. So it's ironic. Like, a lot of the guys who use those things, they get the exact opposite effect of what they were hoping for. Okay? And it happens regularly because people ignore the warnings and they think that they're going to outdo it and they're going to be the statistical outlier. And then they find out, oh no, you're also within the curve of distribution. Whether it's the normal distribution or the Laplace distribution, chances are you're not an outlier. And even if you were, you probably didn't know when to get out when you were on top. Very few people actually know how to do that. Get out when they're at their best. Most people tend to stick around a little bit too long. So, like in all things, metaphors only go so far. Nevertheless, if you think of trading as working out your financial muscle, okay? Then think of it in whatever ways you like, and know that this metaphor does apply. Leverage is basically poison, right? Yes, it can help you in the right hands if you know what you're doing and you don't overuse it. You can get some benefit from it, right? If you don't use more than 2x, 3x maximum, right, on any given trade. At the same time, even at that, it can devastate you if you don't know what you're doing. And anything higher than that can be very dangerous. 5x, 10x, 50x, right? 100x, 125. I mean, there's people who do crazy things. In commodities, they offer thousands of x, but that's because usually commodities move tiny, tiny, tiny amounts, right? Even 4x or whatever, they offer crazy high amounts of leverage. But in commodities especially, but that's what it was invented for. It was invented for assets whose price moves barely at all, so that the trader could do something with it, right? Otherwise, nobody would trade that stuff. So, well, it's not nobody would, but there are many assets that a lot less people would trade if they didn't have access to very high leverage in commodities, for example. But in crypto, which is so volatile, right, where a 1 minute candle can be 5% or more, right, of the asset's price. That's a lot if you don't recognize that, right? So you don't need leverage really in crypto. You just have to manage your trading well, and that means knowing how to take your profits early and often, limiting your loss. In other words, getting out of trades that go against you and getting out of them as quickly as possible. And of course, not being emotionally attached to your trades, because that is the thing that will devastate you more than anything. So, that's it. Happy trading.